Welcome back to Bazaar Morning Call. Well, plenty to discuss in terms of stocks that are going to be moving around today. And we have Prakash Diwan who joins us for just that. Hi, Prakash. Good morning. Good to see you in. Prakash, I was traveling over the weekend and airports are full. I believe that even room rates are moving up. So this travel and leisure space clearly isn't done. What about Interglobe? That's going to be a large trade that takes place today, where the promoter entity will be selling a little bit. The street was anticipating this. But your view on the stock?
Good morning, Nigel. So I absolutely corroborate with this view that this is a space that is likely to see continued consumption, trends which are positive. Intergroup particularly, has gained so much of market share, so much of heft in the last year or so, in spite of the fact that we thought Air India and Vistara and AirAsia would all kind of converge to give it, tough competition. But I think their ability to be able to fill the right kind of pockets in terms of vacant slots which are there, the kind of routes that the sectors that they've chosen, and the way they've kind of priced themselves. They are a bit expensive, but not too expensive to hurt, but absolutely in a profitable zone. So my sense is the numbers which come through in March will be absolutely very encouraging. This particular stake sale from one of the co-promoters is essentially an overhang which should go as quickly as possible. Once that happens, it'll be very interesting to see what the Gangwal family does with a lot of this money that's coming through, whether there's speculation that they could probably start feeding that into another competitor airline. But we'll leave that for another day. But on Interglobe, I think the numbers, the ask, everything is looking very promising. And my sense is that after this overhang is out of the way, you'll probably see a little bit of resumption of buying for the next leg of the journey of the stock. So quite positive on it. It could surprise you with some very sterling performance even going forward.
Okay, that's interesting. The other space that will be in focus this morning, Prakash, is the insurance companies, right? Strong data coming through in February, whether you look at Max Life, where premiums have gone up 51%, SBI Life premium is up 32%, ICICI Pru is very strong as well, 33%. In general, how do you feel about this space? And from a retail investor's perspective, do you think there's more upside?
Good morning, Sonia. So you're right. The numbers tell you that every time there is a little bit of a softness in the insurance stocks, go ahead and just buy that, because they willy-nilly they end up kind of relying on their distribution strength, and all of these, by the way, have immense tailwind from the bank assurance machinery chugging, including Max, which was probably missing, but with Axis coming into the picture, it's a very different story. So very clearly, some of these three, four players which are largely bank assurance driven will continue to grow, because not just awareness, but the kind of digital reach that they have created. And I can tell you, I've seen people availing of insurance who always wanted to, but they didn't know how to enable that. But that's changing so dramatically. I'm quite positive that they will have growth rates which are superior to the industry or the entire segment. But you need to buy these when there is some sort of a news flow which starts giving you those at some sort of a softness. But at this point in time, also, the risk reward is quite favorable for a market outperformance. I mean, don't expect blockbuster returns, but then, today we are in a scenario where even market outperformance is seemingly a good enough target. So from that perspective, it's good. And of course, these are run by very strong DNA, organizations. You really don't have to worry about the flip-flops on a quarter-on-quarter basis. Look at it from a multi-year perspective.
Prakash, hi, good morning. The Tata Group companies, right? There's enough tailwind in terms of fundamental triggers, but the latest for the Tata Chemicals 40% move was that a story which comes back every few years. Tata Sons is listing and, what it's worth, a stake is going to be worth, etc. We, of course, we just put out something that it's in the foreseeable future, it's unlikely. A listing is unlikely. They'll try to avoid it. And they'll try and seek ways to do that. If this entire recent rally, last 5-6 days, and of course on Thursday, all Tata Group stocks rallied. You think there's a bit of a reversal at hand?
Good morning, Prakash. Possibly, because this move in the last week or so, and if you look at post the numbers that Tata Chemicals clocked, the earnings released, it actually fell from, because the numbers are fairly soft, because, the soda ash, caustic soda space is not something which is really in the best of health. And their ability to go into the newer businesses is still kind of taking time. While they have great, presence, 13 of, units overseas, they're doing a lot on battery fluids and all of that. But, all of that is still in the works. It's not yet started looking commercially very, very positive as yet. But this move of 35-40% of the last 15 days was probably a re-rating of sorts because it was bashed out and this. And it's, let me tell you, Tata Chemicals will always be available at softer valuations. So from a value perspective, you have a very good risk reward when the PE multiple comes down. Because right now it's shot up, because the stock has shot up 40% in the last 2 weeks or so. But this news is something which you can't rely on in terms of, adding it to the portfolio. So if there's a softness, it goes back to the 1,000, 1,100 zones. There you have a very good opportunity to build it into your portfolio for the change in the fundamentals of the business and the business model itself. So I would rather look at that. But yeah, the reversal probably seems imminent. I'm not too sure of what Tata Sons announces or decides to do about this IPO potential. But, there looks like a little bit of too much of optimism built into that news flow.
Okay, all right. Prakash, I think you're still in Goa, right, Prakash?
Yes. So that's why, those expensive fares and room rates don't really bother me, Nigel. So you're welcome to join here.
Now, I was there actually over the weekend, but a very short trip with the kids. So in Goa, I don't think you want to go and watch too many movies. But I wanted to ask you about PVR, because Goa was really beautiful, Prakash. I just loved it. To get the kids out of the beach was a task in itself. But be that as it may, I wanted to ask you about PVR. That's been one of the big underperformers. It's corrected from around that 1,900 rupees to around 1,350. But at around 1,350, which is one of the crucial support levels, we're seeing some kind of buying. There were a couple of releases that are lined up, but otherwise no big release, maybe for the next quarter as well. Valuation-wise, though, I think it's trading at less than 10 times EV upon EBITDA. Your view on it?
So interesting that you picked this because, over the weekend I was discussing this with somebody who tracks it very closely and understands the business far more than I do. And the view that I could summarize out of that was that, at this valuation of less than 10 EV by EBITDA, it's very clear that you are valuing the screens at a level which is probably not too far off from the lowest bands that we saw. There are a lot of screens that change hands at about 12 crores in the past, cinemas which got sold out to a lot of these multiplexes. Right now, from the number of screens that they have, 1,700 or whatever, it's not something which is very expensive from that perspective. I agree, Nigel. But the challenge here seems to be an assurance of footfall. What's happening is while you're competing with OTT to get people into cinema halls through the door, it's also the creativity of the industry, which is not something which is very foreseeable, in the sense very certain or predictable. So if that doesn't kind of give you some sort of a semblance of visibility, it's very difficult to figure out how, the next quarter, 4 quarters is going to go. So it's a great franchise. After the merger, it almost sits on, a very monopolistic kind of a dominance in the business. So if the sector does well, it actually rides well. But when the sector turns around is a question that I don't have an answer to. So I would look at something far safer, boring, and not very uncertain in that sense. But yeah, I do agree it's kind of bottoming out. So for people who have the long-term view and a patience to hold on, it could offer an opportunity. But I don't have a very constructive view at this point.
Okay, not a very constructive view on PVR Inox. Got that. I wanted your thoughts on HDFC Bank because CLSA has downgraded the stock this morning and they've cut their target price to 1650 from 2050 earlier. They still haven't outperformed, but they've downgraded it from a buy. What do you do? I mean, as an investor of HDFC Bank now.
So yeah, if you look at this downgrade and the revision in price objectives, 2050, which were the earlier price objectives, seems to have, they probably have forgotten to downgrade it too soon. And even at 1650, it gives you an upside of $200 from where the stock is. So from that perspective, what they're saying is it will do well from where it is, but not as well as what we anticipated. So that's absolutely par for the course. What does an investor do? While the legacy is absolutely formidable and strong, the bank needs to reinvent itself because it has morphed into a very different organization, right? After the merger. So people will have to give it time to bring back all that salience in this merged form, and with so many different customer bases and so many different product bases. And that reset will take some time. It's not so easy for elephants to dance so easily. My sense is you'll have to give them at least 2 quarters, and then the numbers look up. And by the way, the data that's come through RBI's reports on the first 15 days of March or even February, the deposit growth rates have been very, very weak. So what's happening is a lot of the deposit buildup which was happening across the sector is not taking shape as much as you would want an HDFC Bank to benefit. So they'll probably invest this energies into setting up branches, doing whatever they can to expand the base. I keep getting calls from HDFC Bank being a customer for fixed deposits so very often in the last 3 months. I've never had that in the last 20 years. So, it's very clearly an aggression that they are getting back, but it will take some time. Once all that reset happens on those ratios, 110 CD ratios and all that, we'll have to start normalizing. It will happen. But look at some of these banks, the other private sector banks, they might probably start doing better towards March end once things look up. But HDFC, you'll have to an investor, you just have to be patient. Don't get greedy and keep buying at lower levels, because you'll have a time correction, if not a price correction, which could last almost a year.
Prakash, I wanted your thoughts on, M&M. I know we've discussed it ad nauseum, but this morning HSBC has raised their target price on M&M, speaking about if M&M went down the same route as Tata Motors and demerged its farm equipment and auto business, it will be big value unlocking for shareholders. Would you concur with that view, and is that the logical progression for the business?
So, we are in a bull market, so the mood is to kind of figure out triggers to push things to the limit. But, the demerger for a auto business, between the auto and the farm business, would probably be a bit too shallow. I mean, Tata Motors was a different thing, where the depth that they've created in each of those businesses and the commercial business legacy is very different. I don't think that's the same comparable, metrics that would work so well in favor of M&M. But, never say no, because there's always the possibility of some sort of a synergy emerging out of, this thing demerging as well. While they're together, things could be different. But the best part about M&M is that if things turn around on the farm sector, automatically the stock will get re-rated irrespective of what happens to the demerger, because that's the only lag today they have. Otherwise, if you look at SUV, EVs, a lot of those other pockets that they are focused on to, they're doing extremely well. So I would not get tempted buying into this just because of that. But yes, things do look positive if as I said, the agri sector starts picking up and the vehicle sales start picking up within that sector.
Okay, all right. In the last 6 months, actually, the stock is up over 20%. So let's see what happens from here. In fact,